Right on, right on, right on. We're moving towards target levels. All-time highs on the S&P 500 as predicted. The Dow moved above 45,000, new all-time high. S&P moving towards the target levels on the weekly and the daily time frame. NASDAQ moving up to a new all-time high, moving towards the upper boundary of the rising wedge as well. You'll see all those charts in this video. Now, we had Powell speak today. We're going to get the jobs report on Friday. We're going to get the inflation data next Wednesday and Thursday. The week after that, we'll have the Fed meeting 2 weeks from today. Announcement. We had Powell speak today and Q&A session. All the headlines are wasting time talking about all the articles today about this Q&A for Powell, talking about the Fed's independence and tension between President Trump and Fed Chair Powell. That's not the story here. The story is that the Fed is completely oblivious to the recession that's about to start. Powell talking about the strong economy. Fed can afford to be more cautious. No, they can't. They should be slashing rates right now, but they're completely blindsided by the recession that is about to start, just like they were back in 2007. They had to go and do emergency cuts, just like they did with the inflation when they told us it was transitory. Is that the Fed, again, does not see that a recession is about to start. I watched this Q&A, and I was cracking up. I was asked about the jobs data. First, he made an excuse for it, and he said that labor data is the best data that they get over there at the Fed. Unbelievable. No wonder why these guys don't see a recession coming. They think it's the best data, the fake numbers that we get out of the Labor Department that have hundreds of thousands of revisions over the last 2 years, constantly being revised down with fake numbers during the election cycle, 2 years leading up into the election. Worst that I've ever seen. Numbers that are completely unreliable, that are fake numbers that are revised down later. Nobody's looking. Wonder why the Fed does not see a recession coming. We got that, not the last jobs report where we had the hurricane data and the labor strike in the data with that 12,000, but the one before that, remember that number we got that ended up being revised down sharply, or I think it was 32,000. And let me just bring up the jobs data here again. Actually, I was wrong. It was 31,000, not 32,000. But again, this number, the September number, we got that in early October. Everybody is going, why is the Fed cutting? And now you got Powell recently, a few weeks ago, second-guessing himself, after the election. There's no hurry to cut. We're in a good place. And reaffirming that today when, again, we're going to find in a couple months, we're going to get an emergency cut out of the Fed when the recession starts, and they realize, because they're oblivious to it right now. Seeing on inflation, we see the deterioration in the jobs market. The first 10 months of 2023, we had over 2.5 million jobs. First 10 months of 2024, we only have 1,700,000. Difference of 838,000. We've had 838,000 jobs, fewer jobs created in 2024. They can't see what's going on. Powell talked about the labor market still being good. Unemployment rate's still relatively low, and seeing job creation, and I mean, just completely oblivious, just like they were in 2007. I mean, exactly. I'm telling you, we're going to get the inflation data, and we're going to get it next week, and we're going to eventually start seeing it go up, and you might start seeing it go up next week. That might be a catalyst for the sell-off. Was higher in 2007, right before the recession, higher than it is right now. Still went higher. Fed still did an emergency cut because they were focused at that time on the inflation rather than on the economy. And then after the recession started, then they realized it was too late. They should be slashing rates. They are making a monetary policy mistake right now. Continue to talk about this and more today, but I couldn't believe it. I about fell over. Powell was talking about how reliable they rely on the labor data. No wonder why they don't see the recession coming, because they believe these bogus, fake numbers reported and then sharply revised down later by hundreds of thousands of jobs over the last 2 years. The overestimating of hundreds of thousands of jobs. These numbers are not reliable. I don't know if Powell's second-guessing himself because of some fake jobs number that we got, in early October with the September number there. the election with Trump winning and talking about bringing in his economic policies or your yield rising. I don't know why the Fed doesn't see the data that I've been showing you, but doubling down on it today. So taking credit, down inflation, if you can believe it. The Fed didn't see, they did not see the inflation. Telling us it was transitory. Finally, it soared. They finally started raising rates. Eventually, they had to do jumbo rate hikes, which they're going to eventually do jumbo rate cuts because now they're blindsided by the coming recession. But Powell, I got to quote this exactly. This is just too good to be true. Powell said, "We aggressively raised rates when it was necessary to do so." Are you kidding me? That's what he said today. Go watch it. Aggressively raised rates when it was necessary to do so? No. They aggressively raised rates when they were blindsided by the inflation telling us it was transitory forever. Absolutely incredible. You can't make this stuff up. Like in 2007, Bernanke never saw the housing, 2006 and 7 there. He kept telling us there was no housing bubble. It added to the financial crisis with their policy, and then Bernanke got praised for helping saving us from the financial crisis, which again, were part of the problem. Please support the channel with the link directly below that allows me to be able to provide you this information. If you take a moment to do that, I would really, really appreciate it. Step up to the plate and help out. I just put all the information out there for free and ask that you partner with me. I want to sell you a bunch of stuff. A lot of shady deals on the internet. People want to charge you double and triple commissions for stuff that they want to, things like gold or whatever. So I just ask that you partner with me. If you follow the link below, it'll take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. If you could take a moment to help out, I would really appreciate it. I thank you for your consideration for that. The VIX, again, is forming this bullish divergence. The VIX was up today. Even though the market was up, the VIX was up today. It's forming this bullish divergence on the RSI, and we're seeing it on other indicators. You've got it going on here with the stochastic, which is getting a bullish cross, and the MACD. Again, we're seeing it on indicators where the MACD is getting pretty much two equal lows, a Class B divergence, and the stochastic is turning up, getting a divergence. So again, I think you're going to see, again, really start to spike in the coming days ahead, and I think you'll see it over these next couple of weeks here as we move towards the Fed meeting on into December. Again, I think you're going to see the tightening of the Bollinger Bands is telling us, hey, something's getting ready to happen, just like it was over here. And then, boom, we had that sell-off with July, and NASDAQ dropped nearly 16%. S&P dropped, about 9%. I told you I thought a divergence would develop, and over here I told you I thought we were going to drop back below the 50-period moving average with the presidential election results and take us to our target level on the S&P 500 monthly chart. It did do that. We did reach that target last Friday. Told you I thought we'd overthrow it and go to 6,100, which I still think. But now, again, we're getting this divergence. Told you to be watching for move to 6,100. We're now seeing that happen. So again, I think the time is short. I think the S&P is going to move a little bit higher, but then I think that we're going to see volatility spike back up. The 50, the green line, is still above the 200, the black line, and they're going flatlined here. Again, this is not good. Telling us a major sell-off is coming. And because it doesn't play out immediately, then people get lulled into a false sense of security and go, oh, it didn't play out yet. We didn't see the divergences on the weekly chart play out yet, so it's not going to happen. And then, again, you're going to be in a very dramatic drop. In 2007, when we started to tank, we tanked very quickly, 20%. Same thing with the bursting of the tech bubble. S&P 500, we tanked 19.5% immediately. We could see a drop, after the market peaks, we could see a drop within 6 to 8 weeks of 20% very quickly. Oftentimes, the VIX will bottom before the S&P tops. So keep that in mind. We did have an update on the VIX. The VIX could bottom ahead of the S&P, but again, the warning signs are here. These bullish divergences, which may or may not be done yet, but again, it is a warning sign that, hey, could soon see volatility start to turn up sharply. Now, here is what I'm right-oning about. S&P is moving to new all-time highs, doing exactly what I told you it would do. I told you we had that divergence on the 60-minute chart yesterday, but we didn't have it on NASDAQ, and I told you we still higher because we're going to get the 9 count today. But I told you whether we get a little pullback or just the divergence doesn't play out, again, we'd complete that 9 count. We did complete it today. I'll show you that in a moment. But again, looking at this now, again, we've got the divergences going on here. Maybe the MACD and the RSI still move to a new extreme. That's still possible. I think we're coming up to this trend line right here. Dotted trend line right here, I've taken it from this peak right here. It moved on me just slightly though, but again, this trend line coming in just a little bit lower than that. We're right underneath there, or right at that Bollinger Band. We closed about 3/4 of a point above it, so not even 1 point above it, but we're right at that level, just closing slightly above it. We had a little bit of an intraday push above it, but we didn't close right at the high of the intraday. Again, I think you're going to see some closes here above this level. We got the 9 count. I think you're going to slam into this trend line right here in the next few days. We can turn. Could we turn with the jobs report on Friday? Maybe. Could we turn with the inflation data next week? Possibly. So again, going to be looking at this, but a beautiful rising wedge on the S&P 500, continuing to get new all-time highs, as I've been warning over and over in each and every video. And I kept telling you, we're going to move to the new all-time highs. My signals remain bullish. I've been bullish because we didn't reach that target level on the monthly time frame until last Friday. On Black Friday, we reached it. Probably overthrow it a little bit, reach this trend line, and again, line in the weekly time frame. I think we're moving towards that high 6100 area. I told you trend line on the monthly time frame, but I told you we can overthrow it or move into the new month and it goes a little bit higher, as I talked about in yesterday's video. We're moving to this high 6100 area, which again is just eyeballing this mid to high level. We can overthrow it depending on if we reach it immediately or take a little bit of a little bit more time to reach it. But again, you see a reversal within days of reaching this level, within days, region I should say, and see a reversal begin. Here it is up close. I want to show you again. We got the 9 count. We completed it today on the S&P 500. We completed it today on the NASDAQ. You can get the 9 count and you could turn immediately. We did over here, or you can get the 9 count and you can go a little bit higher, like over here and over here. We went a little bit higher and then we got the turn. Now these turns were corrective moves. Next turn we get, we'll likely see those divergences play out in the weekly and the monthly time frame. Next turn we get, the next reversal, the next downturn we get will likely be a complete reversal and a breaking of this trend line right here, the rising wedge of on the daily chart of the S&P 500 here. In the 9 count, we're probably going to go a little bit higher. Signals are still bullish, but I think we're going to stall around this trend line or maybe even overthrow it. Sometimes rising wedges, you get overthrow moves. This area is very, very close to the area in the weekly time frame. Again, this area comes in at the low to mid 6100 area. Now we're at the high 6000 area. Predicting we go into that mid 6000 area and likely overthrow it and move into 6100. I've talked about that in every single video. So now here it is. That's what I think is going to happen. But this area, the weekly chart, it's more like the high. If we hit it over the next 2 weeks here, this week or next week, it's like the high 6100 area here. It's like the mid, or if we just straddle along this area. But if we overthrow this level, and again, sometimes you get that with rising wedges, again, you might hit that 6100 area, just overthrow this level slightly and get a topping tail or something like that, or just a head fake above it. And we completed the 9 count today on the NASDAQ, moving up toward the upper boundary of the rising wedge, which I'll show you on another chart in just a moment. But a 9 count here, again, gapping higher with earnings from Marvell Technology and Salesforce, helping the stock market, helping NASDAQ go higher. NASDAQ's moving to a new high. The NVIDIA daily chart so far is making a lower high. I think they're going to diverge as they did back in June and July. About the NASDAQ in just a moment. I just want to talk more about these target levels on the S&P and NASDAQ. Now, going back to the S&P real fast, again, this upper trend line takes us above 6100, maybe into the low to mid 6100 area if we hit it immediately, maybe higher if it take a while to hit it. If we overthrow it, we can go into the high 6100 area. But look at the weekly chart. Hit that this week, maybe with the jobs report, So we're going to get negative numbers out of the jobs report, but like I said, not show up until we right at the recession. Sometimes you get it just before, sometimes you get it right with. Jobs report, be looking at this level right here. Again, if we reach it immediately, it would be the high 6100 area. The trend line goes to the right of the chart higher each week, higher with each week. Looking at this trend line too, excluding the shadow right here, it intersects right overhead in the high 6100 area. We could reach that 6100 area, go further to the right of the chart. Again, the low 6200 area. Trend line is my target. We haven't reached it yet. We did reach the one in the monthly time frame, but we're just at it again because, again, we hit it the last day of the month. Looking at this area, I think we're going to reach it. And as we're doing this, we're forming these negative divergences. You have the rising wedge I just showed you on the daily chart. Then you have the larger one here going back to the peaks earlier in the year on the S&P 500. I think we're going to complete a blow off top here, burst around these trend lines. But right here, if we hit it immediately, the high 6100 area. I told you we might overthrow the trend line in the monthly time frame, but we started a brand new month, so it went a little bit higher. Get 1 bar per month, and again, as I've said, trend line's the target. October, it was just below 6,000. In November, it was just above 6,000, right around the 6,040, 50 area. We hit that right on the nose, 6,044, mid 6,000 area, and then now it's just a little bit higher. But I think we're going to hit and reverse off of this trend line right here. And again, put in a major top, start a reversal, and usher in a bear market. Now, we reached it the very last day, this trend line, the black trend line. Low end of the target was a red one there at 57.50, excluding the shadow from 2000, including it. We hit it right on the nose the very last trading day of November. And I told you we might even overthrow this level, which we're now doing. And again, it goes a little bit higher as we start the new month, but we're still overthrowing it. I told you we might go into that 6100 area. Our boundary on the channel on the weekly chart is in the high 6100 area. So I think we're going to overthrow this level as we're doing now and reach that level, which I've talked about at great length and detail. The trend line right now is coming in, again, just a little bit higher. It's coming in the high 6,000 area, which we're overthrowing that just a little bit there. Now, before the month ends, we could see a topping tail here. We could see some kind of reversal bar before the month ends. So do keep that in mind. There's a good chance we see a peak, negative divergences play out in December. Very, very possible. Going back to the weekly chart, again, why is that possible? Because we have the negative divergences. But I think that we could reach this level, which is about 1.65% higher from where we are right now on the S&P 500. I take the S&P up about another 100 points. So be watching this upper channel line on the S&P 500 very closely. And rally. We can move to this trend line or even overthrow it. If we do, then the blue trend line comes into play, which again is parallel to this lower boundary, which takes us to the high 6100 area. If we take our time reaching it, we go on into 6200. Again, the further to the right of the chart go, the longer we take to reach it, the higher the trend line goes. But this is the trend line I'm looking at. This divergence, multiple point divergence, just like down here on the MACD, that's going to give us a reversal. Could reach this level this week or next week, the inflation data or ahead of the Fed. We take our time reaching it, then we can reach it with the Fed. But again, the trend line will move a little bit higher. 1 bar per week, and each week that trend line rises. Nothing to worry about. A multiple point divergence here. It doesn't play out immediately. We're still moving towards our target here in the weekly time frame. We just reached our target in the monthly time frame, and now slightly overthrowing it, as I said, to that 6100 level that I've said in every single video over and over again. I think you're going to see this reached in December here. And again, I think there's a very good chance you're going to see this play out in December into January. But I do think you got a pretty good shot of it being reached here in December, tagging the weekly level, tag the monthly level, and again, likely to overthrow it as we're already doing and predicting for a very long time now. The mid 6,000 area and then overthrowing it and going into the 6,100 area. Because of this trend line right here. I've shown you this chart over and over. I zoom out, and again, you can see the divergences from 2022 and 2020. We now have a multiple point divergence. That's going to give us a reversal in all likelihood. There's the channel that I just showed you. Log scaling, again, we're directly below it. We're likely going to reach this level. Do it immediately. Again, the high 6100 area. Our time, we're going into the 6200 level, but I think we'll reach that trend line. I think you're going to see this divergence play out. Once this is done, again, look at the rising wedge here. Look at the rising wedge over here in 2022, the little rising wedge. Look at the rising wedge right here. Again, these are smaller rising wedges. This is a bigger one. It's a multiple point divergence. These were just simple little divergences. In the November and January peak here in 2022, back over here in 2020 between January and February, these led to crash moves in the larger bull market, 27.5% over here, 35.5% or 35% over here. One will likely lead to a reverse. Yesterday there was a divergence on the S&P 500, but no divergence on the NASDAQ. And I told you again we were going to get those 9 counts. We very well could see the divergence canceled out. We saw it on the MACD here. We saw it on the RSI, and then we gapped higher, and it got canceled out. And again, we had to reach the trend line slightly here with this low. And again, I've redrawn the trend line from the low that we had yesterday with the breach. But again, regardless, we're now moving above this upper trend line, which again was a little rising wedge. And I told you, even if we pull back with the rising wedge, we still may get just a little shallow pullback and still go higher. I still believe we're going to the 6100 area, but now we're moving to a new extreme on the RSI, which I told you could happen. So again, I think we're going to end up forming a brand new divergence here in the coming days ahead. So I'd be watching for that here on the 60-minute chart. Do we reach an extreme with the jobs report, pull back and then go higher, maybe with the inflation data, or the inflation data the catalyst for the sell-off? It very well could be. Could play out a couple of different ways, but regardless, I'll be looking for a divergence or however it unfolds. Rising towards the 6100 area as I've been predicting. We are probably going to see some closes above. We already got a close just under a point above that upper Bollinger Band. We'll probably see a few closes above it and then turn back below it, just like we did surrounding the presidential election and the last Fed meeting, just like we did back over here, marking these short-term peaks. We get a top, something like over here at the July top, where we got above it and then hung out there for just a few sessions, and then we got the turn, and we'll probably see something like that. Like I said, we may even overthrow this level, reach a trend line in the weekly time frame. So RSI moving up to new extremes here on the S&P 5, or on the NASDAQ, I should say. Didn't have a divergence on the NASDAQ 60-minute chart. Now, and I told you we very well could go up to new extremes. I told you we were getting positive earnings, and after hours yesterday, those earnings spilled over into today. And then we had Powell. Market continued to rally. So again, we're likely going to see a divergence develop over here. Again, I told you about this one before the sell-off happened. We saw that sell-off. I told you about this one right here before that happened. And we had the bullish divergence on the S&P down over here, where we had the discrepancy with NASDAQ. It got a higher low. S&P moved to a lower low. Key support ahead of the election and the Fed. And I told you we were likely going to get a rally with the presidential election. That correct, just like I told you over here, we're going to bounce off the 200 period moving average, bouncing out the 50 in the daily over here on NASDAQ. So again, the levels I've talked about bounced. And again, watch for diversions right here. We did not have one previously. What the S&P did got canceled out, and now we have the new extreme here. So we'll be watching this level. NASDAQ overthrowing that trend line in the weekly time frame. I'll be watching to see if we close back below it by the end of the week. Do we hit resistance levels and then off of them end up getting a topping tail here in the weekly time frame, maybe with the jobs report, or on into next week. If we overthrow it, we could see a reversal. Divergences are still present again here in the weekly time frame on the RSI, the MACD, the price oscillator. It's everywhere. NASDAQ rising up towards that upper boundary of the trend line right here that I've talked about at great length and detail. We're just underneath it right here. Again, we may even overthrow it. Again, rising wedges, you often get an overthrow move, but you've got this really nice looking divergence on the MACD. The RSI looks like it's moving up slightly higher. Could be this moves to a new extreme here, or again, we get these two equal peaks in a Class B divergence. Indicator makes equal peaks, and we see price go higher. That's a Class B divergence. But B, we just moved to new extremes. Down over here at this low, we just moved to an extreme. There was no bullish divergence. for that bottom. Watching this upper boundary, I've been talking about reaching this level. NASDAQ did not diverge with S&P 500. I talked about that possibility as well. It's diverging. NASDAQ is diverging with NVIDIA, which is so far making a lower high. NASDAQ's making a higher high. Very same thing happened back in June and July. NVIDIA peaked at the June peak. Okay, NASDAQ went higher. NVIDIA did not, and that's exactly what's happening right now. NVIDIA is making a lower high. I think it's making a head and shoulders pattern. We could see NASDAQ come back up to the upper boundary or even overthrow it. NVIDIA puts in a right shoulder, a lower high. Now, if we do not see that happen, and again, I talked about straddling along this boundary, this lower boundary of the rising wedge. We broke it. Now we're back above it. We're getting above the 10 and 20, but the 10 is below the 20, and I talked about a rising wedge in this area between the 144 area and the 148 area. Again, if we get something that looks like this and we roll over, okay, it doesn't have to be perfectly equal to the other high. Sometimes you get lopsided patterns or slanted necklines. Here you got a really nice horizontal neckline, but we could have a lopsided right shoulder higher than the left shoulder. If that's not going to be the case, then we can go back up and hit this trend line again one more time. That's certainly possible. Major resistance right here at this trend line right here. We not only hit this trend line, but you hit the long-term trend line in the weekly time frame. It's about the channel having to break right here on NVIDIA. If the longer-term trend line that we just turned off of right there with earnings just a couple weeks ago, we dropped 14%. Now we're rebounding back up. If we set up a lower high, I'll be watching. Do we break this trend line? That would terminate the bull market in all likelihood. If we break this trend line and start taking out the 20 and stay below it, a divergence play out. We started to roll over here. Now that's trying to be prevented from happening for the weekly chart here. So again, I'll be watching to see how it closes. But again, this is the most important trend line in the stock market because NASDAQ follows NVIDIA, and when this trend line breaks, that's going to be extremely bearish. If we get a lower high, we could do that sooner rather than later. If we go back and we get a higher high, the upper boundary of the rising wedge, then again, we would hit that trend line. It again anyways, a longer term trend line I've talked about with NVIDIA. If this trend line breaks, and that's the channel right here on the weekly chart, if that trend line breaks, it's going to confirm a reversal of this longer term channel with all of the data that we have on NVIDIA. And if it does that, in my opinion, I think it will terminate the bull market for NASDAQ and S&P. Terminating the bull market for NVIDIA, well, and pop the AI bubble. You got a topping tail at that trend line in the weekly time frame. And again, my guess is that we're going to eventually break this trend line. But like I said, possible that we go up and hit the trend line again. But I'm looking for, in all likelihood, a lower high and a divergence like we got back over here where we had the June peak with NVIDIA and then we got a lower high in July. Something similar to that between NVIDIA and the NASDAQ where NVIDIA makes a lower high. Came right up to this area, but it got a lower high. So again, that possible head and shoulders pattern there on the daily chart.